Imagine turning a small investment into a fortune by spotting undervalued stocks before anyone else. In today's video, we're revealing the secrets of value investing mastery that will help you uncover hidden gems in the stock market and skyrocket your profits. Alright folks, so you've heard about value investing, maybe even dabbled a bit. But what does it truly mean to master this art? It's not just about finding cheap stocks. It's about understanding their real worth and predicting their potential. In this video, we're not just skimming the surface, we're going deep, unveiling the strategies and secrets that can set you apart in the investing world. Whether you're a newbie or a seasoned investor, there's always something new to learn. So gear up, because by the end of this, you'll be looking at stocks in a whole new light. History of value investing. Alright, before we dive into the nitty-gritty of value investing, let's take a quick trip down memory lane. Ever wondered where this whole idea of value investing came from? Well, it's not some new age concept. The roots of value investing can be traced back to the early 20th century. And the godfather of this approach, none other than Benjamin Graham. This man literally wrote the book on value investing, laying the foundation for future investors. Now, while Graham kickstarted the movement, it was further popularized by some big names you might recognize. Ever heard of Warren Buffett? Or maybe Charlie Munger? These legends took Graham's teachings and ran with them, proving time and again that value investing isn't just a theory. It's a practical, profitable strategy. But what made their approach so successful? And how did they spot those undervalued stocks before the rest of the world caught on? Well, that's what we're about to uncover. Let's delve deeper into the core principles that drive value investing. Ready to unlock these secrets? Core principles of value investing. Diving deeper into the realm of value investing, there are some foundational principles that have stood the test of time. These aren't just random strategies. They're the bedrock upon which legends like Buffett built their empires. Margin of safety. This is all about buying stocks at a discount. It's like snagging a designer outfit during a clearance sale. The idea is to buy a stock for less than its estimated intrinsic value, giving you a cushion against potential losses. Intrinsic value. Speaking of intrinsic value, this is about determining the true worth of a stock. It's not just about the current market price. It's about analyzing a company's fundamentals, understanding its potential, and then deciding what it's genuinely worth. Long-term perspective. Rome wasn't built in a day, and neither is a stock market fortune. Value investing is a marathon, not a sprint. Patience truly pays off in this game. It's about holding on to stocks for years, even decades, and letting the magic of compounding do its work. Now you might be thinking, sounds great, but does it really work? Well, let's delve into why value investing has been such a successful strategy for many, transitioning smoothly into our next segment, why value investing works. Ever wondered why some investors seem to have the Midas touch, turning their investments into gold? It's not just luck, it's the power of value investing. Let's break down the magic behind this strategy. Psychological factors. The stock market is a wild beast, driven by emotions like fear and greed. Often investors overreact to news, leading to stock prices plummeting or skyrocketing without a solid reason. This is where value investors swoop in, buying undervalued stocks when everyone else is selling in panic, or avoiding overpriced stocks when the market is in a frenzy. The power of compounding returns. Albert Einstein once said, "Compound interest is the eighth wonder of the world." And he wasn't wrong. By reinvesting dividends and holding onto stocks for the long term, the returns compound, leading to exponential growth over time. Market inefficiencies. Not all stocks are priced perfectly. Sometimes the market undervalues a gem or overvalues a dud. Value investors capitalize on these inefficiencies, buying undervalued stocks and waiting for the market to recognize their true worth. Take a moment to think about these principles. Imagine harnessing the power of the market's emotional roller coaster to your advantage. It's not about following the herd, it's about carving your own path and making informed decisions. Ready to dive deeper? Let's explore some common pitfalls that even seasoned value investors can fall into, transitioning to our next enlightening segment, common mistakes in value investing. Stepping into the world of value investing can feel like navigating a minefield. While the rewards are enticing, there are pitfalls that can trip up even the most seasoned investors. Let's shine a light on these common blunders. Chasing cheap stocks. Blindly, just because a stock is priced low doesn't mean it's a good buy. It's essential to differentiate between a genuinely undervalued stock and one that's cheap for a reason. Always dig deeper to understand the company's fundamentals and potential growth. ignoring market trends and economic indicators. While value investing often involves going against the grain, it's crucial not to turn a blind eye to broader market trends and economic signals. Being aware of the bigger picture can save you from making costly mistakes. Lack of diversification. Putting all your eggs in one basket is a risky game. Diversifying your portfolio across sectors and industries can cushion you against unforeseen market downturns. Reflect on these pitfalls. Have you ever found yourself making one of these mistakes? Don't be hard on yourself. Mistakes are teachers. Every misstep is a learning opportunity. By being aware of these common errors, you're already a step ahead in your value investing journey. Up next, we'll delve into the tools and techniques that can empower you to make informed investment decisions. Let's equip you with the knowledge to spot those hidden gems. Tools and techniques for value investing. Diving into the stock market without the right tools can be like sailing the seas without a compass. But fear not. With the right techniques and a keen eye for detail, you can uncover those undervalued stocks that hold immense potential. Let's explore fundamental analysis. Think of this as the health checkup for companies. It's about understanding their financial well-being. PE ratios, price to earnings. It's like a price tag for stocks. A lower PE ratio might suggest you're getting more earnings for your buck. It's calculated by taking the stock price and dividing it by the company's earnings per share. Book value. Imagine if a company sold everything it owned. This value represents what's left after paying off debts. If a stock is trading below this, you might be onto a bargain. Dividend yields. It's the company's way of sharing profits with you. A consistent dividend can be a warm hug from a company, signaling its stability. Qualitative factors. These are the less tangible, but oh so crucial aspects. Management quality. Think of this as the captain of a ship. A skilled captain can navigate even the stormiest seas. Competitive advantage. What makes the company unique? It could be a secret recipe, a patent, or just a brand everyone adores. Macroeconomic indicators. This is about getting the bigger picture. It's like understanding the weather patterns before setting sail. Interest rates. These can influence borrowing costs for companies. Higher rates might mean higher borrowing costs, which can impact profits. Pause for a sec. Are these tools in your toolkit? Remember, in the world of investing, knowledge isn't just power, it's profit. Up next, we're diving deep into a real-life treasure hunt, a case study that showcases value investing in all its glory. Stay tuned. Case study, a successful value investment. Ever heard the saying, a story is worth 1,000 data points? Well, maybe that's not the exact saying, but you get the gist. Let's dive into a real-life tale of an undervalued stock that later soared, showcasing the magic of value investing. A few years back, there was a tech company named Tech Treasure Inc., not its real name, of course. The market was skeptical about its future due to a failed product launch. The stock price plummeted and many investors jumped ship, but the value investors, they saw potential. The situation, Tech Treasure Inc. had a strong track record, a loyal customer base, and robust R&D capabilities. But one product failure had overshadowed its intrinsic value. The analysis, value investors dug deep. They found that the company's book value was much higher than its market value. The PE ratio was low, suggesting the stock might be undervalued. Plus, the company had no significant debts and a history of bouncing back. The decision. Many value investors took the plunge and bought the stock at a discounted price, betting on the company's long-term potential rather than short-term hiccups. The outcome. Fast forward a couple of years, Tech Treasure Inc. launched a groundbreaking product that became a massive hit. The stock price? It skyrocketed, rewarding those patient investors with handsome profits. This story isn't just about profits, it's about vision, patience, and the art of seeing value where others see failure. It's a testament to the power of value investing. But don't forget, this is just an example. I'm a financial educator and not a licensed advisor. It's important you do your own research and or consult an actual financial advisor before putting your money into something. Take a moment, reflect on this story. Can you spot such hidden treasures in the market? You might be thinking, yeah, but that's all talk of yesterday. How would it look today? Well, that's what we'll get to next. Let's explore how value investing has evolved in the digital age and how you can adapt these timeless principles to modern markets. Modern value investing. In the age of tech giants and startups, value investing might seem like an old-school approach. But my friends, the core principles remain as relevant as ever. The game has just evolved a bit. Today, we're not just looking at traditional industries. Tech stocks, once considered highly speculative, have found their place in the value investor's portfolio. Companies like Apple or Microsoft, which once were growth stocks, are now seen by many as value plays due to their massive cash reserves and consistent revenue streams. But it's not just about tech. The globalized world means we're no longer limited to domestic markets. Emerging markets offer a plethora of opportunities for the discerning value investor. Countries like India, Brazil, or Vietnam have companies trading at attractive valuations, waiting for the keen-eyed investor to spot them. However, it's how Uncle Ben already said, "With great power comes great responsibility." Or, well, in this case it would be, "With great opportunity comes great responsibility." Anyways, diversification is even more crucial now. It's not just about spreading your bets across different companies, but also across different geographies and sectors. This global approach can help mitigate risks and tap into growth from various corners of the world. Reflect on your current portfolio. Are you too focused on one region or sector? Maybe it's time to broaden your horizons and explore the vast world of opportunities out there. Alright, enough of the global tour. Let's get practical. Up next, I've got some hands-on tips for all you aspiring value investors out there. Stay with me. Practical tips for aspiring value investors. Alright folks, let's get down to the nitty-gritty. You've got the theory, you've seen the success stories, but how do you actually get started on your own value investing journey? Let's break it down. Research is your best friend. Before diving into any investment, do your homework. Understand the company, its industry, and its competitors. Financial statements, annual reports, and industry analyses are your go-to resources. Stay rational. The stock market can be an emotional roller coaster. But remember, as a value investor, you're playing the long game. Don't get swayed by short-term market fluctuations. Stick to your strategy and avoid making impulsive decisions. Diversify, but don't overdo it. While it's essential to spread your investments across different sectors and regions, don't scatter your funds too thinly. It's better to have a well-researched portfolio of a few strong picks than to invest in everything and anything. Avoid the hype. Just because everyone's talking about a particular stock doesn't mean it's a good buy. Often, by the time a stock is popular in the media, it's already overvalued. Trust your research and instincts. Continuous learning. The financial world is ever evolving. Stay updated with market trends, economic news, and investment strategies. Consider joining investment clubs or forums to learn from fellow investors. Take a moment to think about these tips. Which ones resonate with you the most? Are there any you're already implementing? Remember, the journey to mastering value investing is a continuous process of learning and adapting. Now, as we wrap things up, let's take a moment to reflect on everything we've covered and the transformative power of value investing. On to the conclusion. Conclusion. Alright, champions of value, we've journeyed through the intricate maze of value investing, from its foundational principles to the modern-day strategies. We've unearthed the secrets of spotting undervalued stocks and learned from the masters of this craft. Value investing isn't just a strategy, it's a mindset. It's about seeing potential where others don't, having the patience to wait for your investments to bear fruit, and the wisdom to learn from both successes and failures. Remember, the stock market isn't a get-rich-quick scheme. It's a platform where informed decisions, backed by thorough research and a clear understanding of one's financial goals, can lead to substantial rewards over time. So as you embark on or continue your value investing journey, keep these lessons close to your heart. Stay curious, stay informed, and most importantly, stay patient. As we wrap up, we hope you found this video on value investing helpful. If you did, think about someone who might also benefit from this info. As you see, financial knowledge is of critical importance, especially in today's world. After all, we don't have our name for nothing. Money does matter. If you got someone, share it with them so they don't miss out. We'd love to hear your thoughts, so feel free to leave a comment below. If there's any topics you'd like to know more about, be sure to drop them in the comments. Your feedback helps us create content that serves your needs. Don't forget to like, comment, and subscribe to stay updated with all our latest videos. We have a lot more informative and exciting content planned for you. And that's all for today. Thank you for watching and investing your time with us. We hope to see you again next week here at Money Matters, because your money matters.